All right, everybody, welcome to Hashrate Bittensor Brief. Today we're covering Synth Subnet 50. So the basic idea behind this subnet is they're providing you, person out there, access to advanced quant models that predict market movements with high accuracy. So in the past, only hedge funds on Wall Street, high-powered, high-dollar hedge funds, have had access to these kinds of tools. What do these tools do? Well, they predict the future, right? So they're looking at the movements of stocks and cryptos, and based on kind of what's happening in the sentiment and lots of different factors, they are able to predict with better than chance accuracy what is likely to happen. Now, there's sort of this probability cone, right, which extends out from the movement of the stock or the crypto price, right? So it's like, it's instead of like, it's going to move from $2 to $3 in an hour. It's not like that. It's more like, well, there's a 50% chance it'll move from $2 to $3 in an hour, and a 20% chance it'll move from $2 to $1.50 in an hour, right? So it's like that. So it's like a cone of probability extending from the stock or crypto price. So in the past, this kind of tool has only been available to high-powered Wall Street traders, right? It's very expensive. But Synth decentralizes these financial predictive intelligence models and makes them openly available on chain. Now, anyone, individual traders, DeFi protocols, autonomous AI agents, can use the hedge fund level tools directly that Synth provides. So how does this work? Well, it's a competition, just like everything in Bittensor. So there are over 200 independent data scientists, miners, who submit these probabilistic forecasts for crypto and other assets. So the miners are basically doing whatever they do, and whatever they're doing is their own business, right? Like all miners. So ostensibly, they've created AI models of some sort on their end, and they are turning in their predictions, which are these sort of cones of probability, right? So they're not specific, this will happen at this time. It's there's this probability that this will happen at this time, that probability that this will happen at that time, that kind of thing, right? So that's what they're submitting. The more accurate they are over time, the more weight is given to their predictions. So you can't just sort of play this game and guess what it's going to be, and hopefully you'll get it right. And if you do, you win some mining rewards. No, the competition is set up to reward the miners who are providing the most accurate over time predictions. So this sort of competition system means the system itself gets better every day. So the best forecasters, the best miners rise to the top. And since launch of the subnet in January of this year, Synth has significantly reduced the error rate of the GBM model. So basically, it's improved 33% since the beginning of this year. So pretty good. So at the moment, Synth is handling 4 key assets: Bitcoin, Ethereum, Solana, and gold. And so they're getting forecasts on these assets. And the roadmap is to expand to the top 25 crypto tokens over time. So that will cover the majority of the crypto market. So not the top 100, but basically the top 75 that you would see on CoinMarketCap. So the 200 data scientists, the miners in the system, are competing daily, and their payouts to date since this subnet was launched have been in excess of 2 million since February. So that's 2 million in subnet tokens have been awarded from the emissions from the Tau blockchain to miners competing in this subnet since February. So, pretty sizable monetary prizes there for doing this correctly, getting it right more often than your competition over time. So some real world use cases, where can Synth be applied? Well, prediction markets, so things like Polymarket and Kalshi. DeFi perps trading, so basically smarter leverage management and liquidation avoidance on perp dexes. So, if anyone who's ever played around with perp dexes knows, the root of all evil for you as a perp dex trader is when you get liquidated, right? When the price sharply drops out of nowhere below what your collateralization ratio is, and boom, you've lost everything, right? So having an idea of what is going to happen with a price in the future is extremely valuable for avoiding liquidation. So you could, programmatically plug what Synth is doing into an agent which is managing your position on a perp dex. And basically, if Synth is predicting that there's some probability of a price drastically dropping below your collateralization ratio, you can programmatically have this agent that's managing your DeFi position get you out, like basically liquidate yourself in advance of sell your position off. So highly valuable to anyone who's ever done perp dex trading. So liquidity providers, so anyone who's ever provided liquidity on Uniswap or the like, better LP range settings for higher and more stable yields. So if you can predict the price, you can basically adjust what your range is for providing liquidity within one of these dexes. And now let's return back to Polymarket, because Synth actually has some real world success on Polymarket. So over the past 4 weeks, using Synth's probabilistic price forecast, so this sort of probability cone extending out from the present moment, they basically fed 2,000 into this test account on Polymarket, and then Synth executed 12,000 trades with 500,000 in volume. So that's a lot of trades with a little amount of money. You can get up to 500,000 in value, right? So that 2,000 was just traded relentlessly over the 4 week period, but they've generated a 110% return. So that's a pretty amazing result. Synth is proven in a real world market that they can, in fact, beat chance and other traders and predict the future with some greater accuracy than what you would be able to achieve by chance or just kind of going on gut instinct, right? Now, I did read up a little bit on how they achieved this feat, and the Synth model is in its natural state. It's on a 24-hour period, right? So the probability cones are for a 24-hour period. They had to sort of back adjust that to trade on an hourly time frame and with hourly predictions. So they had to sort of fudge a little bit. But as a result of this success, they are now focused on narrowing Synth's focus on high frequency trading. So much shorter time horizons for the predictions for the probability cones, and returning those results faster. So that's kind of where they're headed next with the product. So what is the TAM, as people say, the total addressable market? Well, if you look at the narrow market definition, which consists of alpha signals and alt data for investors, basically the data and model outputs purchased primarily by hedge funds, asset managers, prop firms, and traders. At the moment, investment managers are currently spending $2.5 billion on this sort of capability at the moment. So that at least is the total addressable market. But if you sort of take a broader definition of the market, basically there are a lot of other people that would find this data more pretty valuable. That total addressable market is $44 billion. And of course, if this actually is democratizing this kind of information to the masses, to people who are not professional traders, that total addressable market is probably even larger as now you've got this sort of giant long tail that you can address. So how big is that? I don't think anybody knows. But there's probably a lot of people who would buy this service at some price, right? So, and also there's a lot of DeFi protocols out there that would probably want to address Synth's future predictive capabilities into things they're doing. Like, for example, I highlighted the PerpDex trading thing earlier, or application earlier, as well as the range-bound liquidity manager, right? Like being able to know the future and adjust ranges dynamically. AI agents can trade using this Synth data, right? Because it's all on chain. So they'll be able to benefit from that knowledge on chain, the AI agents, and make decisions based on this predictive capability. So just to summarize what we've learned here today. So Synth democratizes tools that were once locked behind hedge fund walls. It harnesses decentralized competition to continually improve predictions. So over 200 data scientists and AI model makers are continually competing with each other. And the ones that are doing the best consistently over time make more of the emissions, right? Just like any Bittensor competition. And the Synth output thus significantly outcompetes traditional pricing models. And Synth has already proven its traction with the 4 assets that are live today. And they're going to broaden their coverage to the top 25 tokens. And it's had some proven traction on Polymarket. So pretty good track record so far. So that's it for this Bittensor brief. My name is Mark Jeffrey. Hope you enjoyed it. See you all next time.